Right, looking at the markets in West Africa, starting with the BRVM, it was down slightly lower, but for Ghana, we saw it slightly higher. In Nigeria, the market was up about 0.6%, closing at 37,259 points. Year to date, the market is now up 32%. So really looking very, very good at this time. Joining me in the studio to give me some perspective on the Nigerian market is Babatunde Oladosu. He's an analyst with financial derivatives. Tunde, thank you so much for joining us. So the market definitely in a very good place, 32% for the year. Fantastic performance so far, but the big question is, where do we go from here? And I want to get your thoughts about some of the trends we've seen in this earnings season. Right now, we're in a bit of a quiet season. We're not seeing that many results being announced. So your thoughts on the big takeaways from what you've seen in the first quarter? Sorry, in the second quarter.
Okay, thank you very much, Wally. So great to be here. Sincerely, I think it's been a phenomenal year in the market so far. You said the market has still continued to amaze analysts and to confound predictions. Yesterday, we saw the market do 60 basis points basically, and yet today going to 32%. What that tells us basically is that the market currently is 300 basis points away from what it did in the whole of 2012. Right. That's outstanding. On a comparative basis, Nigeria is more like very, very well ahead of a lot of countries in Africa and the world. Now, that said, we've seen. Yes, we said a bit about the earnings season, but I think the market has reacted seriously to the earnings we've seen so far. We've seen a lot of activity. We've seen a lot of release of results in the banking space and industrial goods space. Funnily enough, for how much the market has done, our observation is that much of what we've seen a lot of activity in stocks that declared both dividends and bonuses. We've seen
so it's more of a dividend and bonus play in this quarter.
Yes, we've seen basically that kind of a reaction. Right. And two, we've seen also reaction to very good bumper, I would say bumper harvest, but in terms of good performance in the first quarter.
But if staying on that dividend and bonus theme, a company like Okomo Oil, I think is one that may have, if you like, investors have overreacted to the dividend and bonus payment there. Your thoughts about the potential for some of these companies to fall back?
Yes, I think Okomo does have a strong possibility of falling back. Now, the company gave a 7 naira dividend and a 1-for-1 stock split. Now, last week or 2 weeks ago, thereabout, we saw an adjustment in the price of this stock. Even at that, we still think in terms of earnings per share basis, on a PE ratio basis, this PE ratio is still very high. Now, for Okomo Oil, we think, and fundamentally, we think that stock should be adjusted downwards. Again, look at in a futuristic view, looking at projecting, we see the company has had a terrible first quarter. We saw profits coming down like 80%. We saw revenues coming down like 35%. Right. The basic issue with Okomo Oil currently is that the price of oil in the international market has fallen drastically, and it's been falling over time. So what it means is that the revenue of the company is constrained. Even as much as the company had a generous bonus payment last year, they had to do 60% payout, even when they had that contraction in profit. Okay. So we think Okomo has that possibility.
We're running out of time, but I wanted to get a quick thought on consumer goods space. That is, if you look at the conglomerates, they're up about 40% this quarter alone. Cement is the only other sector that can match that performance. So your thoughts about the pricing of conglomerates, particularly those in the consumer goods space right now?
Generally, I think the market has confounded a lot of people, like I said before, and the sector that shows that the most is the consumer goods space. Now, we've seen a lot of recent activity in Cadbury, in Unilever, in Nestle. So Nestle, for it's a word on its own in terms of analyst prediction. Most stocks generally on the consumer goods space are on a sell recommendation. Some of them have been on the sell recommendation for years. And so what has happened? They continue to do well. They continue to astound the market. What we think is, most consumer goods are more like the extension of what foreign investors think about the Nigerian market. Foreign investors are placing their bet on a large market, wonderful demographics, rising middle income, middle class, and growing population. So these investors have decided that these stocks are, again, look at the horizon, the investment horizon. I think they are in most of these stocks for the long term, and they are actually increasing their stake.
So they're willing to pay that.
They are willing to pay. And going forward, we don't think the companies can match dividend performance. We saw most of them had flattish revenues in the first quarter, except Cadbury. Most of them had flat revenues. Some of them even had contraction in revenues. And so we had that pressures from the revenue side. They also have pressures from the profit side, because we had financing costs blossoming and ballooning out of proportion. So again, the consumer goods space is still, for we think it's overbought, we think it's overvalued, and we think it should trend. It should trend downwards. But again,